If you are retired right now, or if you are standing right on the edge of retirement looking out into the future, I want you to stop what you are doing and pay close attention. We need to have a serious, unfiltered reality check about your money. Because there is a silent, creeping danger out there that is waiting to take a massive bite out of everything you have worked your entire life to save. I am talking about taxes. You see, for 40 years, you have been told a massive lie. You were told that when you retire, you will automatically be in a lower tax bracket. You were told to just blindly put your money into your traditional 401ks and traditional IRAs, take the tax deduction today, and worry about tomorrow when tomorrow comes. Well, guess what? Tomorrow is here. And for so many of you, that tax bracket drop you were promised is not happening. In fact, for a lot of people, their taxes actually go up. Let me ask you a question that I know keeps you awake at 2 a.m. Are you absolutely terrified that you are going to outlive your money? You see your account balances, and they look pretty good on paper. You feel a sense of security. But what you are forgetting is that the money in your traditional retirement accounts is not all yours. You have a partner in those accounts, and their name is the Internal Revenue Service. They own a massive chunk of your nest egg, and you don't even know exactly how much they are going to take because tax rates can change at any moment. Think about the fear that brings. You want to travel, you want to help your grandkids, you want to know that if you get sick, you can pay your medical bills without going broke. But every time you go to take a distribution to pay for your life, a voice in the back of your head whispers, how much of this am I going to lose to the government? Am I pulling too much? Am I triggering a tax bomb? That fear is real, it is valid, but it is also completely paralyzing. And being paralyzed is how you lose. The big question you need to ask yourself right now is this: how do I take back control of my financial destiny? How do I stop the bleeding before it even starts? Because if you do nothing, the tax laws are set up to force your hand. When you hit age 73 or 75, depending on the year you were born, the government introduces you to a little thing called required minimum distributions, or RMDs. They will literally force you to take money out of your traditional accounts whether you need it or not, and they will tax every single cent of it as ordinary income. That forced income can push you into a higher tax bracket, it can make your Social Security benefits taxable, and it can even trigger massive surcharges on your Medicare premiums. It is a domino effect of financial pain, all because you didn't have a plan. But I am here to tell you that you do not have to be a victim of the system. You can reduce your taxes in retirement, but you have to be proactive. You cannot wait until April to think about this. You need to act now. And here is exactly how you do it. First, you must understand the power of tax diversification. You cannot keep all your eggs in one tax basket. You need 3 distinct buckets of money: a taxable bucket like a regular brokerage or savings account, a tax-deferred bucket like your traditional 401k, and a tax-free bucket. And that tax-free bucket is your ultimate weapon. I am talking about the Roth IRA. If you have all your money sitting in a traditional IRA right now, you need to look into doing strategic Roth conversions. This means you intentionally move money from your traditional IRA into a Roth IRA today. Yes, you will pay taxes on the money you convert right now. I know that sounds painful. But you are paying the tax on the seed, not the harvest. Once that money is inside the Roth IRA, it grows completely tax-free, and when you take it out in retirement, it is 100% tax-free. No matter how high tax rates go in the future, the government cannot touch it. More importantly, Roth IRAs do not have required minimum distributions during your lifetime. You decide when to take the money, not the IRS. You need to do these conversions systematically. You don't convert the whole account in 1 year and blow yourself into the highest tax bracket. No, you fill up your current, lower tax bracket to the very top, year after year, slowly moving your money from the tax later bucket to the never taxed again bucket. Second, if you are over the age of 70 and a half, and you love supporting your church, your favorite charity, or a local nonprofit, you need to stop giving them cash. If you are writing checks from your bank account to a charity, you are making a huge mistake. Instead, you need to use what is called a Qualified Charitable Distribution, or a QCD. A QCD allows you to transfer money directly from your traditional IRA straight to a qualified charity. By doing this, that money never shows up as adjusted gross income on your tax return. It completely bypasses your income taxes, and if you are at the age where you have to take RMDs, a QCD counts towards satisfying that required minimum amount. You satisfy the law, you help a cause you love, and you pay zero income tax on that distribution. That is how you play the game smart. Third, you have to be incredibly careful about the order in which you spend your assets. Don't just blindly pull from one account until it's empty. You need to balance your withdrawals. Maybe you take a little bit from your traditional IRA up to the standard deduction limit, then you supplement the rest of your lifestyle needs using your Roth IRA, which won't increase your taxable income, or you pull from a regular brokerage account where you might only pay lower long-term capital gains tax rates instead of high ordinary income tax rates. Managing your income stream dynamically year by year is the difference between keeping your money and handing it over to the government. I want you to take a deep breath. Look at your financial landscape. Do not let the fear of taxes cause you to put your head in the sand. You work too hard, you sacrifice too much, and you waited too long for this time in your life to let poor planning ruin your peace of mind. You have the power to protect your wealth, but you must be the master of your own money. Nobody cares about your money more than you do. So take action, fill your tax buckets wisely, look into Roth conversions, use QCDs if you are charitable, and map out your withdrawal strategy today. Secure your retirement, protect your peace, and stay safe.